Now that you've done work with typical employee paychecks, it's time for the next step. You know that on paycheck there's an amount called the gross pay, which is the total amount earned, and then you have a number of deductions for taxes and retirement and other things that may be taken out of the paycheck, leaving the employee with an amount called net pay or take-home pay. The next step for anyone who wants to manage their money wisely is to put together a personal budget. That's what we'll be talking about today and in the next several assignments. On your screen, you see a very simple personal budget. We'll be looking at that in a bit more detail later. However, I want to spend just a moment on the spreadsheet Excel itself. This is part of a program called Excel. Some of you may be familiar with it already, some may not, but in order to make sure everyone is on the same page with this, I want to explain a couple basic things. First of all, the concept of cells. Right now, if you look right up here in the corner, I have the cursor on cell A1, and this is called A1 because it's in column A and it's row 1. If I put it down here, now I am in cell B4, column B, row 4. So that's how cells are named. I want to look particularly at this cell. If you look on the budget, total net monthly income is $1,365. And this is significant because of the fact that up here in this area, this is the formula bar. This is called a formula, and it, as you see, is equal sum, and in parentheses F6 colon F7. So this adds up two cells. This one, which is F6, column F, row 6, and cell F7. This is the total. And it helps because this is a very simple total, but it will help because if I would change this, if part-time job number 1 becomes $1,000 a month, make it 1,000, you'll see the total automatically changes. Not 1365, but 1465. So that is helpful in a large column of numbers. Let's go back and put this where it was. So we have a total of 1365. Let's look at one more total way down here under monthly savings. You have a number of things under monthly savings. The total is in this cell F29, column F, row 29, and you see up here in the formula bar, this is the formula for the total, equals sum E22 colon E28. That's E22, that's this number, and it adds all of these numbers through E28, giving you 320. So if I change any one of these numbers from 20, for example, to 200, you see that the total changes automatically, which is a very handy feature of the Excel spreadsheet. So that's kind of some basic information you need to know about Excel. Let's now take a look at the budget itself that you see on the screen. There are three main parts of any personal budget. First of all, you need to indicate and understand the net monthly income. Second part is the monthly expenses, money that you have to spend. And then an important part that a lot of people neglect is the monthly savings. And we'll talk more about that. But sometimes you hear of people living paycheck to paycheck, which means they don't use anything in this area. They don't save any money. And what that means is that their income and their expenses are about the same. So they're not getting anywhere. They're not saving any money. So if they want to buy, that person wants to buy a car, for example, or eventually buy a home, some large expenditure, there's no way they can do that because all their expenses equal all of their income. They're living paycheck to paycheck. not a very wise way of handling things. So we need these three areas: income, expenses, and savings. Let's look at this example. This, again, is a person who has a part-time job. Actually, this person has two part-time jobs. One has a net monthly income of $900, and the second part-time job a net monthly income of $465. So again, this is a monthly, not weekly, budget, totaling, as we looked before, $1,365. Let's take a look at some of the expenses, and these are typical. It'll change person to person, but this person apparently does own a car, so he or she has to make a car payment every month, so that has to come out of the $1,365. So this is an expense that needs to be there. So this would be something that the person would know, because the bank tells you how much you have to pay each month for your car. So it's $350. Gasoline would be a guess, and this is typically based on past experience. So typically this person pays around $100 a month for gas. So that's put in as a budget expense. School supplies, computer payment. Apparently the person owns a computer and is not paid for yet, so there's a monthly payment of $120. There's a cell phone expense each month, entertainment expense, clothes, online subscriptions. All of these things would be partly part of what the person has to pay every month. Miscellaneous would be kind of a catch-all thing. It's good to have this because unexpected expenses come up, and we have allowed a little bit of money for that. So these are all of the typical monthly expenses. Now this person is saving money, or saving some money every month, which is a good idea. So he or she saves money for gifts, for car insurance. Now, one point about this $125 for car insurance. The question might be, why wouldn't that be a monthly expense? Well, typically car insurance is paid every 6 months or maybe even annually. So this is not a monthly expense, but let's assume it's a 6-month expense. So we need to know what that amount is for 6 months, and each month from January through June, we need to put some money away, and we're going to save $125. So by the time that bill comes in July, I have enough money to pay that car insurance. That's why it's not a monthly expense, but we save it until the bill comes in. We have money for car repairs and expense, maintenance, and this could be oil changes. It could be a number of things, and we need to save for maybe some bigger items as well. Eventually, we may have to buy tires, for example. We have money put aside for vacations, and then for taxes. As we learned, federal and state income taxes are deducted from your paycheck each week or every 2 weeks whenever you get paid. But at the end of the year, maybe you didn't have enough deducted. So just in case, we have a little bit of money put aside for federal and state income taxes, so that by the end of the year, we have a little bit of extra money there if we needed to pay taxes. If it turns out that we don't need that money to pay taxes, then we have a little extra money for vacations or something else that may come up. And charitable giving, something that even if you're working part-time, it's a good idea to get in the habit of saving for charitable giving. It's just the right thing to do. And there are many beneficial charities, including your Catholic high school, for example. It would be good to get in the habit of saving money for charity. And there's a tax implication for that as well, as we'll learn later. If you give money to charity, you can deduct part of that from your taxes, which is obviously another good thing. So this 320, as we looked at before, is a total of all the savings. And this total, the 1365, will add up, if you look up here in the formula line way up the top, F11, cell F11 through F29. So we're looking at F11, column F, row 11, all the way through F29. When we add that up, the formula down here says the total expenses and the total money to savings is $1365. So we have what's called a balanced budget. Our net income would equal the total money that is used for expenses and the money that goes to savings. So this indicates down below here that we have a balanced budget. Again, the advantage of doing this is you've got a plan and you've got the expenses covered and you've got money left over for savings, so you're doing pretty well with this budget. And it's easy to change things. For example, if you decide you're going on a bigger vacation and you need not $30, but you need $130, again, you can see how much you need to put into savings in order to allow for that. And you can change any one of these numbers here and any one of these numbers here. But the idea in the end is that you want your total monthly income to equal the total amount of money that you pay for expenses and the amount that you put into savings. So if you, for example, don't have miscellaneous expenses this month, let's say there are no extra things that come up, everything is taken care of, so this ends up 0. You can see at the very bottom this number changes so that now you have a little extra money to deal with. You can put it in savings, you can just keep it in your wallet for next month, but this ends up being a plus budget amount. So this is helpful to use Excel because it'll make those changes easily for you. As I said, we will be using this particular monthly budget and expand it in the next few assignments that you have. At this point, I'll ask you to go back to your course page and answer a few questions.